Many beginners open a chart and only see candles. But before you trade a chart, you must understand what the chart represents. Each asset class behaves differently. Behind every chart, there is an asset class. Behind every asset class, there are drivers. Behind every movement, there is a market context. Before you trade a chart, understand what the chart represents, because better understanding creates better decisions. Welcome to the Wealth Code Show. I'm Abdallah Harfouch, and today we are answering a simple but powerful question. What are you actually trading? Many beginners open a chart and only see candles. Green candles, red candles, support, resistance, breakout, pullback. But before you trade a chart, you must understand what the chart represents. Because gold is not the same as a currency pair. A currency pair is not the same as an index. An index is not the same as crypto. Each asset class behaves differently. Let us start with gold. Gold is often treated as a macro asset and a safe haven asset. It can react to inflation, and especially when we have expectations of an inflation. Even it can react to the interest rates, dollar strengths, fear, uncertainty, and central bank behavior. So when you trade gold, you are not only trading a metal, you are often trading macro sentiment. Currencies are different. When you trade currencies, you are usually comparing the strengths of one economy against another. Interest rates, inflation, central banks, employment, economic growth, and geopolitical risk can all affect currencies. So a currency pair is not just a chart, it's an economic comparison. Indices are different again. An index like the US 30 represents a basket of major companies. So when you trade an index, you are often trading corporate performance and investor sentiment, as well as economic expectations and risk appetite. So the US 30 is an index-based trading instrument, and it requires discipline because it can move fast and react strongly to news and market sentiment. Now, crypto is another category. Crypto is often treated as a risk asset and a digital asset class. It can move based on liquidity, speculation, adoption, regulation, technology, narratives, and global risk appetite. Crypto can create opportunity, but it also carries high volatility and risk. So why does all this matter? Because if you do not understand what you are trading, you may use the wrong expectations. You may trade gold like the crypto. You might trade currencies like stocks. You might trade indices like long-term investments. This creates confusion. So the chart is important, but the chart is not the full story. Behind every chart, there is an asset class. Behind every asset class, there are drivers. Behind every movement, there is a market context. The eighth wealth code is the following. Before you trade a chart, understand what the chart represents, because better understanding creates better decisions. See you next time in the episode number 9. Make sure also to go to the caption, get to our EAU Group app, and join our community to help you really build your real wealth and give you all the codes in practice.